When you look at a candlestick chart, some candles scream for attention, while others quietly warn you that something is changing beneath the surface. The Gravestone Doji is one of those quiet warnings. At first glance, it looks simple, almost harmless, but if you understand what it represents, it can save you from getting trapped at the top of a move. The Gravestone Doji forms when the market opens at a certain price, pushes aggressively higher during the session, and then completely loses that strength. Sellers step in with enough force to drive the price all the way back down, closing near or exactly at the opening price. What you're left with is a candle that has almost no real body and a long upper wick. That long wick is the most important part of the story. That wick tells you something very clear. Buyers were confident. They believed the price would keep going up. For a while, they were right. But at higher levels, the market said no. Selling pressure overwhelmed buying pressure. And by the end of the session, buyers had nothing to show for their effort. In U.S. markets, whether you're trading stocks, Forex, or crypto, the Gravestone Doji often appears near market tops. You'll commonly see it after a strong uptrend or close to a major resistance level. This is where many retail traders are still chasing price, while smart money is quietly distributing positions. One of the biggest mistakes new traders make is treating the Gravestone Doji as an instant sell signal. Professional traders don't do that. They see it as a warning, not a command. It's the market telling you to slow down, pay attention, and wait for confirmation. Context matters more than the candle itself. If a Gravestone Doji forms in the middle of an uptrend with no resistance nearby, it doesn't mean much. But if it forms after a long rally, near a previous high, a key Fibonacci level, or a psychological price zone, then it becomes very important. Think about the psychology behind it. Early in the session, optimism dominates. News might be positive, sentiment is bullish, and everyone expects higher prices. As price pushes up, late buyers jump in, afraid of missing out. But at those higher levels, institutions start selling. Slowly at first, then aggressively. Momentum fades, price stalls, and then drops. By the close, fear replaces confidence. This shift in emotion is why the Gravestone Doji can signal a potential reversal. But confirmation is everything. Experienced U.S. traders wait for the next candle. If the following candle is bearish and breaks lower, that's when the signal becomes stronger. That's when probabilities start to favor the downside. Risk management is also critical. When trading this pattern, the invalidation point is clear. If price breaks above the high of the Gravestone Doji, the setup has failed. That high represents the level where sellers were strongest. If buyers take it out, the warning no longer applies. You'll often see this pattern work best when combined with other tools. Overbought RSI, declining volume on the push higher, or bearish divergence can all add confidence to the setup. In U.S. markets especially, traders rarely rely on a single signal. They stack probabilities. The Gravestone Doji doesn't predict the future. What it does is reveal weakness at higher prices. It shows you that demand is no longer as strong as it was before. Sometimes the market will reverse sharply. Other times it will consolidate before moving lower. Either way, ignoring this candle at key levels can be costly. For content creators, this pattern is powerful because it tells a story. A story of buyers trying to stay in control and failing. A story of smart money selling into strength while emotions drive late entries. When you explain it this way, viewers don't just memorize a pattern. They understand the behavior behind it. At the end of the day, the Gravestone Doji is a reminder. Markets don't move up forever. Strength can disappear faster than it appears. And the traders who survive long-term are the ones who listen. When the chart quietly warns them that momentum is changing,